Making sense of your dollars, safeguarding your future. Learning to manage your money, invest, save and plan for the future. For the future, the Financial Literacy Bureau, that's the way to go. Making sense of your dollars, safeguarding your future. Make plans and build, stretch every dollar. I tell you, knowledge is power, power. Woo! Making sense of your dollars, safeguarding your future.
For more information, call 535-7700 or visit our website commerce.gov.bb. The Financial Literacy Bureau, making sense of your dollars, safeguarding your future.
Hi, good evening. Thank you for joining us for the first session from the Financial Literacy Program. I'm Colin, I'm a chartered accountant, and I have been in practice for about 36 years. Pricing and costing is one of the things that's near and dear to my heart. This drives the overall productivity or profitability of any business to make sure it is successful. So as we start this session, I asked David to put up the first of our 5 polling questions. And this one deals with just giving us an idea of what your background is, who's attending this session. So you have about 60 seconds to answer this first question.
It's 1815.
I give it about 15 more seconds and then we'll close the poll and get a sense of who's on the program with us this evening. Okay, so the poll results are up. We have about 23% representing the retail sector, 15% of the participants are manufacturing, and 38% are in other generic areas which we did not classify. So we have a pretty broad mix in terms of who's on the session. Let's just get into the presentation. And then as we go through, we have about 4 more polling questions. So how I like to start this, I like to start about, let's do some nuts and bolts definitions of what are the items on the income statement. Revenue is what you earn from sale of goods. You may see it being referred to as sales revenue, product revenue, or income. It is typically earnings from your major business activity. Money earned from non-core activities are usually classified as other income. The second definition is costs. Costs are the things that drive the production of your goods or products or services. This is the money you spend directly on making the things you want to get to the market. This includes the materials, it includes the direct salaries and wages. Very importantly, it includes your national insurance and social security costs related to direct employment. That cost factor is right now almost 13% of your basic wages for production. Any other employment related to any other costs related to staff directly involved in creating the product, direct costs of purchasing and delivery of the products. And then we also need to make sure we attribute other production costs such as utilities, distribution, procurement, and freight into the matrix in defining the costs. If we don't define our costs properly, we will not get the right pricing of our product. Expenses, I like to make the distinction between expenses and costs because they're not the same when it comes to pricing. The expenses are typically your overhead components of your business, admin salaries and wages, insurance, interest expense, bank charges, office supplies, and your general and administrative expenses, advertising and marketing. Some of these costs, depending on the industry you're in, we try to allocate back into our cost matrix in order to make sure that we properly burden the costs in terms of having these expenses allocated into our cost matrix. This is particularly done if we were doing an exercise in terms of job costing or activity-based costing. And then just a final definition in our income statement and profit, the basic accounting equation, which anyone who's done your introduction to accounting course, revenue minus cost of sales equals gross profit and expenses minus expenses equal net income. So let's have the second polling question at this stage. This helps us to understand what are the factors that should be considered in pricing our products. So when you price your products, you take into account the following. Just check all that apply here. Gross profit as a percentage of sales, planned net income as a percentage of sales. How do you currently price your products? Do you just use a markup method, or are you using a gross profit methodology, or a combination of both, or another type of activity? And this is one of the things I really like to focus in on when I get into costing, because the differential or understanding difference between gross profit and net and markup is really critical in getting it right. They give it about 15 more seconds. Okay, so the results are quite interesting. You see 58% use gross profit percentage of sales. We're seeing 48% actually planned for net income as a percentage of sales. People are pricing your product 82% based on a markup on costs and other input costs, and using a gross profit method, only 9%. So let's go on from here. Hold on, just lost my way a little bit in the presentation. So the key to delivering successfully financial product is attain a proper gross profit on sales to cover the administrative expenses and to generate desired net income. So one of the things you really need to understand is what gross profit you must get to cover your admin costs. So let's say your admin costs come out to be 30% of sales. and you want to get a net profit of 8% of the sales. So that automatically means that your targeted gross profit should be at least 38%. If you're below that 38% in your gross profit, it means that you will, one, not attain your expected or desired net income target. And secondly, you may even fall below your overall profitability target and start to lose money. So having a good view of what you are targeting in terms of net income, in addition to gross profit, is really important to get the equation right. So when you plan your costing or plan your pricing overall, you need to take an overall view of the organization and the organization's total targets. So there's no point in saying, well, I want to get a gross profit of X percent, and you don't understand what your expected expense overhead is as a percentage of sales and what you want to make as a percentage of sales in terms of net income. Okay, so David, if you want to put up the next slide, please, the next poll. And we are talking about here, I'm trying to find out here how many people understand your targets in terms of the industry you're in. And while we wait for the poll to come up, I'm just going to run through a couple sample industries that I pulled from some data. So alcoholic beverages, sales, non-alcoholic beverages, building supplies, farming, food processing, and wholesale. So this question is, do you include the following items in the cost of your products before you price them? And again, it's a poll that asks you to check all the different methods that you use. So we're going to close the poll in 5 seconds. Good. Right, so we're going to close the poll here. So 92% of the people in the participating use raw materials as part of their cost component. 58% use direct salaries. Only 32% are using your national insurance. So for example, in a lot of industries, your direct wages and your friction costs related to employment costs are sometimes as much as 40% or 50% of the product costs. If you're not including these two components into your pricing matrix, more than likely you're going to miss your overall target. So it's really important to make sure we properly define the cost components. If we don't define the cost components and we keep things which are really direct costs classified as administrative expenses, then you're not necessarily going to do what we need to get done to reach profitability. in terms of in terms of gross profit, as well in terms of making your net income. And at any day, we have to make net income. So this slide just talks a little bit about some industry norms. So when you get into your pricing and your cost and your pricing, go do some research. Try to understand what the industry norms are. That's the first thing in terms of, first step in terms of getting your pricing right. So on this slide, we've got about 7 industries, some which are popular in Barbados. I want to take you to the last one, which is a green and renewable industry. And we're seeing a 59.29% gross margin. But the industry is losing money overall. 11.39% of sales is negative. What this probably reflects in this number here is that the green and renewable industry is still in the development phase. There are costs that are being amortized, or expenses are being amortized, which creates a high burden in the recovery or attempting to recover that profitability. What we'll probably see in the next 3 or 4 years is that that number starts to turn into the positive margin, and which will mean that your gross margin will probably increase a little bit closer to maybe 65% of sales. The other one is food wholesale. The margin is very low, 1.11%. But what that may suggest that that industry is not attractive.
It's
but
18:30.
typically in your food wholesale business, you're talking about what we call a fast moving goods industry. And that really depends on the volume of transactions. So while this may be a low percentage, you may see this in an industry which generates about $100 million worth of sales, or $150 million worth of sales. So your net income is in the vicinity of $1.5 million, even although the margin is very low. If those of you who may be familiar with supermarkets, general supermarkets who are really into food and basic groceries, this 15.96% is very typical. And it really is dependent on the volume of transactions more so than anything else to generate cash flow. Farming, again, is another one where you can see it's a very low gross margin. But typically when you think about the inputs into farming, you're talking about your direct wages, you're talking about your materials, you're talking about irrigation in the long cycle in terms of getting to production. But as you see, the S&G&A, the selling and general expenses as a percentage of sales is actually just around 6%, which is quite low, which suggests that most of your labor costs, most of your admin costs are directly to the production in the cost of sales. So this chart really just shows you the variation between gross margins across industry. And as you explore the industry, you need to understand what the mix of your costs are going into getting your products to the market. All right, David, can we get the next poll? So we want to get a sense of how many people actually know your production capability. How many items can you produce based on your current staffing and your access to capital, or the ability to sell product volume if you're in a wholesale or retail space? So we'll close this poll in another 10 seconds or so when we hit 80%. So, okay, 56% of you know your actual production capability, and 44% don't know what your production capability is. So this is one of the things that we really need to get a handle on in order to really start to drive costing when we get into looking at our pricing model. Because unless you know what you intend to produce, you really don't get a good sense of cost per unit and then pricing per unit. So one of the biggest problems I've encountered when I look at people who are doing pricing is that they don't understand the difference between gross profit and markup. So a few years ago, I was sitting with a client and he said to me, Colin, I'm making 20% on my sales. And I asked him, is that gross profit or is that markup? And he said, markup. And I said, well, your markup means you're probably only making 15% or 12% gross profit. You're going to be losing money. So sad when we went into his books and took a look at what has been happening for the previous 20 years. He was losing money consistently, but he thought a 20% gross profit was appropriate. What happened there, the other thing that happened was that he was not defining his costs properly. So it was a service industry largely, and they were also selling some materials and doing some construction. And he consistently lost money for over 20 years. One of the biggest things he did not factor into his costs based on the industry he was in was actually his national insurance costs. So in addition to losing money, they also had it built up a significant arrears of national insurance contributions payable. Okay. So as I said earlier, your gross profit is what you need to cover your SG&A and to make a profit. The market is how you attain your gross profit. The table that shows the market required to attain a particular gross profit. So if you're looking for a 20% gross profit, you're looking for a 25% markup. If you're looking for a 50% gross profit, you're looking for 100% markup. And this varies across the industry. But again, what is in your cost base determines if you get the right gross profit as a percentage of sales, and makes sense in terms of what your actual gross profit will be in terms of actual hard dollars. So while we can focus here on percentages, these percentages must be translated into actual hard dollars. So again, let's go back and look at your definition of your cost components. Some people have a very simple approach, goods and materials approach, which is materials, shipping, duties, or we look at our comprehensive cost approach, materials, shipping, duties, freight, labor, NS and benefits, occupancy costs, utilities, distribution costs. And what I throw in here additionally is my cost of financing. And when I say my cost of financing, I don't just include interest costs. I include the cash flow costs of debt service that's related to the production of my goods and products. So I try to create a cost matrix which is fully burdened, which means that once I have my definition of cost right, and I apply the appropriate markup to get to the targeted gross profit, I should cover my SG&A and I should be able to hit my net profit target. Okay. So the next slide, what I'll show you here is that I will go bring up my costing template and just run through it a little bit with you in terms of how to build up your cost components. And we also need to determine our production capability, which we looked at in the last poll. So I'm just going to switch screens here and share the costing template. Right. Everyone can see the screen? Fatima, the SG&A means selling, general, and administrative expenses. All right, so this is a pretty comprehensive costing template that I use when I'm costing products or costing goods or sometimes costing services. And what it does here is try to get to the overall mix in terms of the different cost components, the freight costs into the country if they're external, any type of landing costs that are included, if there's exchange difference, and if we can get to what markup is desired. So very simply here, I've decided at lane cell 7A, 7B, just looking at toiletries, and I'm decided I want here a 20% gross profit on the items. I'm going to buy 50 units at $25 US. The total cost is $1,250 US. What I'm putting here, factors here are costs going into shipping. Let's say from a point of origin to a dock in the US, and then from US to Barbados, we can add in a percentage share for insurance, and we give a CIS value. What we have here is a landed cost. If I said this is subject to duty, my duty rate, I think here is about 10%, and it changes the cost structure, the structure accordingly. When I say input VAT not recovered, let's say, for example, it's an exempt product. So if it's an exempt product, it means that I have to absorb the VAT costs. Otherwise, if I say no, it means I sell through net of VAT. So even although VAT is chargeable, I don't take that into my cost into my costing template. Going across here, I translate it into Barbados dollars, and I come up with a selling price based on the original gross profit percentage. And if I decide if it's subject to VAT here, then it is the VAT is computed. If I said no, that would be the final selling price, which would be $1,890. Okay, so the matrix itself is very simple to use in terms of costing a product. And this is generally if we want to say this is a resale product. But let's say, for example, I wanted to make this I'm baking bread. So let's say my product one is bread. So I have flour. I have some butter. I have some sugar. What else goes into baking bread? Some eggs. And let's say I'm going to come down here at the bottom. I'm going to put in some labor costs, baker, packer, and a shipping clerk. So let's say I want to I'm going to use, let's say, 500 units of flour, 50 of butter, 20 of sugar, and 100 eggs. The flour is $2,000. I'm used to 50, so we can get this. The butter is $50. The sugar is $25, and the eggs are 100 eggs at $20. All right, so that gives me my built-up costs. For whatever reason, we're going to be importing. So this batch is going to be.
It's 1845.
Let's say this batch, we're doing a batch of, let's say 10,000 units of bread. Okay, and let's make our gross profit here. We're going to make our gross profit here 50%. Okay. And to do this, I'm going to need $160 of labor for each component. And the cost per hour, let's say my baker is $18 an hour, my packer is $12 an hour, and my clerk is $10 an hour. Okay. So we get down here and we look at all the costs, and we are saying that the overall cost of production is $299,000 to produce this 10,000 units. Okay, so my 10,000 units, my selling price per unit are 100,000 units. $299 per unit, and my cost would be this is when you're using someone else's computer. And the cost is $149. So in terms of this overall matrix, when we look at as a percentage of costs, we're saying that we are getting a desirable gross profit overall of about 49% of the product. So this means that we are in the type of acceptable range that I like to target for an industry like a bakery, which will have about a 50% gross profit target. And then my selling administrative costs will be anywhere around about 34% to 40%, which means I'm going to hit a 10% net income on this. Any questions on this? I definitely will be sharing this costing matrix with you, the pricing matrix, in terms of something that you can, as a tool to take away from this evening's session. So very simply put, building a proper pricing and costing template is one of the best tools you have in terms of getting it right. Without a good tool, you're started guessing at what you're trying to do. But more importantly, in addition to having the tool, you need to make sure you understand what the components of your costs are. If you miss on the cost components, you're going to go wrong. So let's say a couple of things that we didn't factor in here in terms of our production. Let's say I want rent. Okay. And I'm going to say to produce 100 units, my space is, and I'm going to just take a stab at it. I'm going to say my space is $10,000 for the month. And I'll put in 1,000 at 10, right? And I'm going to take, so I included the markup on my rent, okay? And let's say my capital costs, let's say all the financing that I have in place to run this bakery included the original cost of capital and the interest. Let's say my amortization for the month is $15,000. So I have to be able to recover $15,000 in my rent. So for that, I might decide I only want to get 12.5% on the rent and 12.5% on the cash flow component of my debt service. Okay. But again, it changes the cost structure to $174 per unit, and it increases the cost to $328 per unit of producing this batch of bread. Okay. And we can do this we can use this matrix in terms of pricing one product or two products, or we can look at each product as a distinct unit and build it out into your actual production budget. But what this tool allows you to do is really zero in on getting your costing and pricing correct. So the more components that we understand and we know that need to go into this matrix, then the better it is in terms of hitting the right profitability target, hitting the profitability that we actually desire to meet. Okay. Yes, in terms of Deborah, we're going to do a separate session in terms of services. And we will probably do a separate session when we deal with the creative industry and the construction industry as well. Okay, I'm just going to switch back to the presentation. Okay, my PowerPoint is gone. Just give me 1 second to find it. Oh, there we are. Right, so the costing set, just speaking to the costing template, there's a section that spoke to the inputs, the production inputs, materials, direct costs, and then there's a section where I capture the component for internal staff. So as we ran through the costing template, we looked at what the input costs for the products were, and we had started to apply the pricing. So what I will do with this is, after I've done the research on the industry, what is the industry looking at in terms of desired gross profit? There are some websites out there that gives you some really good information. The one I'd like to use until we can get good data in Barbados is Stats Canada. And the reason why I like to use this website is that I can slice my data based on the targeted revenue. It's a really good tool for SMEs, and it's done by what we call the NAIC code, National Industry Codes. And that gives you some good information in terms of what we see in terms of the expected gross profit for across different industry by industry subcode, code and subcode. In addition to that, we also get a sense of what the net income target is as a percentage of sales. So we get it in terms of absolute dollars, or we can get it in terms of percentage of sales. But it's across, started around $300,000 up to about $30 million, which is really good for our market to get a sense of what we need to do to target the industry, target profitability in the industry we're in. So using those inputs, we get to using those industry metrics. That gives us another good component of the tool using the costing matrix to get to our desired profitability. So this one, I'm just going to run through a little bit more in terms of food and manufacturing, food and beverage example. As we just ran through the pricing, the costing and pricing template, just let's go back and look at the inputs again, the list of ingredients, the quantity of each ingredient to prepare a particular dish, the number of servings that these ingredients would yield, or the employees involved in the preparation, the chef, the food preparation assistants, the cooks, the servers and packers. If it's a restaurant, we also need to make sure that the wait staff and cleaning staff are all also included in this matrix. The other thing we need to understand is what is the utility or fuel cost per hour. This information is pretty readily available. If you buy a stove, if you buy an oven, it will tell you what is the expected consumption per hour of fuel or electricity based on how you utilize the equipment. So if you utilize it at low heat for 2 hours or for 15 or 10 hours in a day, it will tell you expect this amount of fuel to be burnt, and you know what your cost is in terms of your gas, natural gas or bottled gas or whatever coming in, or alternately, you know your if it's electric, you know what your cost is per kilowatt hour. Also include your packaging costs, if any. For example, now that we have been in COVID, a lot more organizations have been utilizing curbside delivery or takeout. What are some of your overhead costs? For example, Chefette just introduced the delivery service, so they bought a whole set of cars and then employ some drivers, and of course, the financing and capital costs. Chefette is a really good example of an organization that knows how to price and cost properly. I don't know if you have noticed that almost every year you will see Chefette increase their price on a product, maybe sometimes as little as 5 cents or 10 cents per icon. What this does is it offsets any cost of inflation, or it may just increase the targeted profitability, or it may reflect the change in the mix of the products and products that we are selling. But because Chefette is in what we call, again, in a fast-moving goods industry, turnover is a key. So let's say you're doing, they're doing $200 million worth of sales, and they do a 2% increase across the board of all product. Everything held the same. That means that they've just generated $2 million just by making sure they increase almost everything by maybe as little as 5 cents or 10 cents per unit. But once you understand your dynamics of your component costs and what your profitability targets are, then you can really sit and price your product across the board. Organizations like Chefette, Kentucky, larger food manufacturing organizations will use a little bit more sophisticated software in terms of pricing, but it gives them what the results they desire. So if you're building a company or building a business, take your time to invest in the tools that will help you price and cost your products. It pays off at the end of the day. So make your investment in software that serves the perfect purpose of what you're doing. A spreadsheet is nice, but I will tell you, specialized software is better. And because most people are now using software as a service, sometimes it costs us as low as $30 US a month. But it would take you some time to build up your database of price costs and of product. But using the software allows for a couple things: predictability of what you're doing. It tracks your sales by unit. It starts to give you seasonality in terms of what you're selling. And it gives you a sense of how do I change from even sometimes day to day in terms of the volume that you need to meet for your customers. So for example, if I'm in Chefette, again, very good example, Saturday sales compared to Wednesday sales are significantly different. So as they prepare their dishes or their meals, they look at what was my production in terms of Saturdays in May, Saturdays in June, Saturdays the 2 weeks before Kadooment Day, and that gives you that type of dynamic information. So the key here is really and truly to understand what you are trying to achieve. Okay. Pricing does not happen in terms of a vacuum. Pricing has to look in terms of ultimately what is my profit incentive? What is my incentive to get into business? So these last 3 or 4 slides, I just want to wrap up in terms of talking about the difference between cash flow and profit, because sometimes we miss this other component of being successful in business. It's okay to generate a profit. There's no point in generating a profit if you do not generate cash flow. So in order for our enterprise to prosper, a few things must happen together. It must make a profit and surplus. It must generate positive cash flow overall. And it must generate positive cash flow for operations. So when I talk about positive cash flow overall, it means that my profitability covers my cost of operations as well as my cost of financing. And it also must cover and generate cash flow that gives me net cash flow as my reward as a business person. If I can't pay myself, I should not be in business. So some of us are accountants on this session. A lot of us have seen situations where a person said, I made X amount of money. And when we go and look at the books, they are running overdraft consistently. There's no way, if you're running an overdraft consistently, it means that you have not secured sufficient permanent capital to do what you need, okay? So let's talk about getting to profitability. A lot of us get very shy about making money. Never be shy about making money. This is why you are in business, okay? You cannot sustain your business without generating a profit. And being profitable means that you live your life because of your work, rather than having to work to live. There are a lot of people who go out there and they're in business and The business runs them. It means every day they have to get up to work in order to live. Successful business people use their work to generate their ability to balance their life, right? It means that your work is working for you as a person. It means that when I get into my office, I generate sufficient profit and cash flow to sustain me and to meet my objectives in terms of day-to-day living, maybe traveling, maybe education, and certainly the ability to generate wealth at the end of the day, so that when it comes to the time that we need to retire or stop working or pull back and transition to our business to another generation, the company is there, or the business is there, and it's self-sustaining and is doing the things that we want it to do. Okay, so I just want to close off looking at a few things. Cash flow versus profit. A business may not generate profit for the following reasons. The product is not properly priced. The product has significant market pressure that results in uncompetitive pricing. It typically means the product does not generate sufficient gross profit to cover expenses, or the expenses are too high. The second point here, the product has significant market pressure that results in uncompetitive pricing. So the solution to that for me, if you get into a business and you cannot compete in the market space, it means that you're shaving your margin to the point where you're losing business. Then you have to make the decision, should I stay or should I go? Or should I change the market? So I'll give you an example from, again, from experience. Working in Bermuda, we bought an internet service provider who at the time had, I think, 100 customers and was losing money. It was part of the acquisition of a bigger transaction. And what we decided, that the market in Bermuda was at the time something like $80 or $120 for dial-up internet. And we said to ourselves, we will not be successful unless we can drive volume. And we took this company in the space of 3 years from 100 customers losing money to over 5,000 customers. But more importantly, we were so aggressive on our pricing, is that we drove the market from regular dial-up internet into high-speed dial-up, and then into not leased line, but you know what I mean, into Wi-Fi and wired internet modems. So, and we drove the market down from $120 per month down to $50 a month. And we went from making no money to $4 million plus worth of sales in that three-year period. Okay, so if you're in an uncompetitive market because of pricing pressure, if you understand how to price and cost your product and understand your profitability target, you can significantly eliminate that problem. If you cannot eliminate this problem, then you need to make a decision. Am I in the right business? Because remember, you're in the business to, one, make a profit, and secondly, to generate some positive cash flow. Okay, and that's it for this evening. Any questions? Okay.
Thank you, Colin, and good evening, everyone, again. There's a message Okay, there's a message in the chat. Someone is saying good night. They logged on late and trying to catch up on everything they missed. A recording of this session will be posted to our social media pages by tomorrow, within 24 hours of the end of this session. Our FLB pages are FLB.246, and this is on Facebook, where the event is actually being streamed live at the moment, as well as Instagram. And by the end of the week, we will also launch our YouTube page, where some of the sessions will also be streamed. So for anyone who may have joined late, recordings will be available tomorrow. I will make a note of your name in this case, and also ensure that we email the link to the recording directly to you as well. But they will be accessible on our social media pages within 24 hours.
Okay, so I have a question here from Ronald.
Yes.
In terms of where does maintenance go? Where there are two components again. You may have maintenance that's directly related to production, material, equipment, or the location, the actual production floor. That maintenance cost goes into the cost matrix. For example, if I have, I'm doing a bakery and I have some ovens, there's usually a scheduled maintenance cycle. And those maintenance cycles tend to be pretty predictable. So the manufacturer will give you a suggested maintenance schedule and the expected cost of that maintenance. So what you do there is that you build that into your cost matrix. Okay. So once they're predictive costs, you always build that into your pricing model if they relate to actual production. Okay. Exact.
Yes, right. Okay, I was just going to read his question.
Right.
When pricing a product, if after your estimates, I guess the costing estimates show your pricing is substantially lower than what exists on the market, how do you decide whether or not to keep the lower pricing or to increase the potential profitability? And he's indicated he's referencing the internet example, but a very valid question, so you can take that on.
Well, there are two things to do. You can do both. If you know that you are an exemplar in terms of pricing and your costs, then you want to keep the market maybe a little bit higher if you want to drive your profitability. Or you might decide, my pricing is so aggressive that if I keep it where it's at, I can then take more of the market share. Now, there's a caution here. As you drive for more market share, you have to understand what does that cost you? How do you scale the business? Okay, so you may say I'm lower than the cost of the market because I'm producing 10,000 units per cycle compared to 25,000 units per cycle as my competitors. But before I make that decision in terms of keeping my costs low, you need to understand what the cost of scaling up to 25,000 units will be. So in that internet example, what we did was that we changed the type of lease lines that we were renting from the service providers at the time, which were Digicel and Cable Wireless. So we went to what we call dynamic volume access. So one of the service providers would say, okay, we can scale you, we're going to charge you not based on a fixed capacity of, let's say, 4 gigabytes per month, but we're going to change our pricing to you based on the change in the volume that's coming through to you. Okay, so what we did was that we shifted from the higher cost service provider to the lower cost service provider, which was one that was providing dynamic pricing. So we were able to do two things: scale our market to meet the demand, and continuously drive our costs down. So it drove our costs down, it drove our volume up, increased profitability in total dollars, in terms of total dollars. So again, before you make that decision, you need to understand what is the differential in terms of how to win that market share. So it's not taken in terms of just isolation. So costing and pricing is a dynamic process.
Okay, thanks for that, Colin. There is a message in the chat. Someone is asking about costing a service. So I just wanted to indicate that costing of services will be a separate session, and I will confirm the date for you when we are closing out this one, but that is going to be a separate session. We thought it wise to separate products and services. If not, the session would have been too long. So costing your services, costing and pricing your services will be a separate session later this month, and I'll share the exact date with you as we close out. And that, of course, will also be posted to our social media and promotional pages. Colin, there was another question. Someone was asking if you can recap gross profit and markup quickly.
It's 1915.
Right. So I just brought this slide back up in terms of differentiating between gross profit and markup. So typically, your gross profit is the inverse of your markup. So if I want to get to a 30% gross profit, I need to mark up my costs by 42.9%. Okay, so many people make the mistake in assuming that your gross profit is actually, your markup is actually your gross profit target. Many businesses have done that, and as a result, we have seen the result. As a result, we have seen them fail while being under the impression they're actually making money. So I have a little chart that I can send that will be included in the pricing template when it's sent out, that actually shows you the calculation of your gross profit as your gross profit based on the markup required to hit that gross profit target.
Right, and Colin, you've just confirmed that the spreadsheet, we will email that out to all participants. So once we receive the spreadsheet from Colin, we do have your registration information, and we will be emailing the spreadsheet out to you for your own use. And remember, again, the recording of the session will be posted to our pages where you can listen to it at a later date. I will also confirm to you that costing of pricing and services is scheduled for May 18th, 2021, which would make it 2 weeks from today. And we are also going to be running the costing your product session again at the end of the month, and the date for that will be confirmed in the coming days. Do we have any other questions? We are welcoming all of your questions.
So,
can you divide the direct expenses by, I take it that is by the number of packs made to get a percentage?
Yeah, again, the important thing is once you know your production capability and you've costed the items, then you can get to your per unit price, which is, again, your costs divided by the number of packages or whatever you're doing. Rosie, I know your industry, so yes, that's one way to do it. But the thing about it is, and I want to speak specifically to Rosie's industry, you have to make sure your packaging costs are included to get to your price per pack. So let's say you're making popcorn and you need to package all your popcorn. You know how much popcorn you're going to make. You know how many packages that popcorn would fit into. You therefore need to make sure that you price in the packages cost, the packing cost into the cost of that product to get your pricing right.
Okay, and I think we have another question. Oh, okay, just additional from Rosie to add to the price per pack.
Yeah, to add to the price per pack. Yeah, so you factor in that packaging cost. All right. There are two schools of thought on that. One, you would include the actual price of the pack and mark it up, and then the other approach has been to just add on that to the actual cost only to the product, rather than pushing up the overall price of the product by pricing profitability into the pack. My preferred approach is I would price and mark up on every component that goes into getting my product to market. This means I'm always certain that I will be successful. If I start doing things at cost, it means that at some point in time I'm going to start dropping below my desired gross profit target, which means it will also then start to cut into my net income target.
Ladies and gentlemen, do you have any more questions for our presenter? We still have a few minutes left in this evening's webinar. The Financial Literacy Bureau will be continuing sessions for the remainder of May on Tuesdays and Thursdays, each day starting at 6 p.m. There are supposed to be 2 sessions per day. Unfortunately, due to some technical issues, we were only able to run 1 today and had to reschedule the second one at late notice. And that's the session Making Your Money Work For You. That will now be hosted tomorrow evening at 6 p.m. On the same topic, same presenter, and persons will be notified accordingly. We do apologize for that inconvenience, but you also now have the opportunity to attend that additional session tomorrow that has been rescheduled. Other sessions will be held in the coming weeks, Tuesdays and Thursdays for the month of May, and a full schedule will soon be published to our social media platforms, but every week, flyers promoting each session and providing registration links will be shared via the social media platforms and via the Government Information Service and other social media platforms of our partners. We want to thank this evening the Institute of Chartered Accountants of Barbados, who are a member of our steering committee for the Financial Literacy Bureau, and I want to especially thank them for providing the facilitator for this evening, Mr. Colin Daniel, and they have also assisted us in providing facilitators for some additional sessions. And as a qualified and professional accountant myself, I really do want to thank ICAB for stepping up and for supporting this initiative. And as I can see from the comments so far, some positive feedback, and persons have indeed found the session to be useful. It is interesting that this session was promoted for the first time last Thursday evening, and within 24 hours, we were at 100 registrants. So we have already set a record as we started, but I want to thank all of you for expressing the interest, and I hope that the information has been useful. We do have another question. What is the approach for products in niche industries with limited research capabilities as a new business? That sounds like an advanced question, Colin.
That's an advanced question. So when we go back and look at, let me just look at this slide here, Green and renewables is a classic example of a new industry. You don't have a lot of development, you don't have a lot of information in terms of the overall performance. So when you enter a new business, the challenge here is really your research. There are going to be some components of the business which the information is well known. So for example, let's say I'm doing solar panel installations. The cost, we know what it is. One of the outliers in terms of cost, in terms of solar panels for electricity generation, was the capacity to generate electricity. So at one point, it was only about 15 or 18% of the solar energy taken in was being converted into electricity. So that meant that you actually had to fit out a building or roof with many more panels than would have been required if you were able to convert at 40%. So having the ability to understand that component of that type of industry, then you understand what the driver is. The biggest cost driver there was the cost of panels. The second driver there was the cost of batteries and storage in terms of batteries. What has happened over the last 10 years is that the efficiency of both the panels and the batteries have gone down. The costs have come down. But when you settle in this industry, you have to take the decision, am I going to price at a very narrow margin to drive my volume so it makes sense to enter the market? Or do I price for overall profitability so that I can stay in business? If you've been doing research in the business, then you realize you would know that the cost is going down. It means that you have to be willing, you have to find a willing financier who understands the business or understands what you're saying about the business, who is willing to take a risk on you for 2, 3, 4, 5, 6 years before you get to the profitability. So the challenge here is really understanding where the industry is expected to go, and then make some decisions in terms of how long do you think you can stay in this industry and survive until you get to the profitability that is required to drive to positive cash flow. Hopefully that answered that question. All right, Rosie has another question.
Yes, if the amount of packs every month is different because of the different products made, can you get the percentage from the previous month, or won't that be viable?
Yeah, again, coming into the costing and pricing is about planning, okay? So as you drive your business, you have to understand what your seasonal variation is in terms of what you expect to plan to produce this month, in terms of what the mix will be, and in terms of what the mix will be for the next month or for the next season. So your production requirement, let's say for Christmas, in terms of your packaging, is going to be very dynamic, significantly more different than if you are going into the summer period or if you're going into a low period. But the more you understand how your business is moving, then there's predictability in terms of what you require. So the short answer is you have to plan for every seasonal variation. And that information comes from some of your historic information, and some of that information also will come from, if I want to start changing how the market responds and how my market changes based on how I'm driving my marketing to promote a particular product. So let me flip back over to our good friend Shafet. They have determined that they will run regular specials in terms of every month or every season. Based on what their planned production capability is or requirement is for a particular special, then they will change their procurement of the packaging to suit that expected demand. So pricing and costing is a predictive process. It's not necessarily historical. It is not necessarily a historical process or I'm just going to do this month. It is predictive. What do I want to achieve? So it goes, the planning is important rather than just saying, I'm going to produce this. Just don't produce. Understand what your market is demanding, or understand how you want to make the market change. Okay, I hope that answers the question, Rosie.
Okay, ladies and gentlemen, I think we have had a productive session, and please remember that you can continue to submit any queries or questions to our email address at flb.246@barbados.gov.bb, flb.246@barbados.gov.bb is the email address for the Financial Literacy Bureau.
It's 1930.
You can feel free to send any additional queries there. A reminder that the recording will be available on our social media pages within 24 hours. That's the full recording. And we will also be creating shorter versions of different aspects of the session and also some key tips that will be shared across our platforms for your benefit. I want to thank all of you for logging on to the session and for the extremely good response that we have had to the session. And we encourage you to see the Financial Literacy Bureau as your initiative, as your learning platform, as we seek to support you in understanding all things financial. So I want to wish you all a very good evening, and thank you all for joining the session today.
Thank you.
Making sense of your dollars, safeguarding your future, learning to manage your money, invest, save and plan for the future. For the future, the Financial Literacy Bureau, that's the way to go. Making sense of your dollars, safeguarding your future, make plans and build, stretch every dollar. I tell you, knowledge is power, power. Woo! Making sense of your dollars, safeguarding your future.
For more information, call 535-7700 or visit our website commerce.gov.bb. The Financial Literacy Bureau, making sense of your dollars, safeguarding your future.